Hey, what's going on? Welcome to my office. In case you don't know me already, my name is Ryan Stewman. I'm the president and CEO of Closer Capital, where we help entrepreneurs like you get access to the capital they need to grow and scale their business. One of the questions that I am asked daily, people slide my DMs with financial questions all the time, and it really is me that answers them, by the way, just so you know. But they say, how do I know if the business I want to buy is eligible for SBA financing? And there's a lot of nuances to that because there's several different types of SBA loans, and there are a lot of requirements to be able to finance the business because the SBA is basically insurance for a bank. That's basically what the SBA is. They say, hey, if this loan defaults, then we'll pay you, the bank, for it, and we'll assume the debt and responsibility of this. So in order for them to lend on a business being the riskiest asset you can buy, by the way, right? It's also the way to get wealthy, but real estate is not risky. Why? There's an asset there, right? Cars are not risky. There is an asset there. But businesses, people buy businesses and crash them all the time. People buy businesses and make terrible financial decisions, and the business goes out of business all the time. So the SBA puts certain requirements in place to make sure that their money's good and that their insurance is going to cash flow and not cost them. So let me give you some of these requirements, like general eligibility requirements, and then we'll dive deep into details as well. So couple of things. In order for a business to be eligible for SBA, the 10, 30,000 foot view is it has to be a for-profit business, okay? They're not going to lend on 501c3s and not-for-profit entities. It has to be a U.S.-based business, okay? So the operations must be here in the U.S., all right? It has to meet the small business standards. And so here are the small business standards. They vary because, like, if you have a footwear manufacturer, for example, you can have up to 1,000 employees and still be considered a small business because of the size of that industry. Whereas, like, a sheep farming operation is considered small with $3.5 million or below. So the SBA has standards for this called the NAICS code. You can look that up and see if the business fits in those standards for its industry. There are eligible and ineligible industries as well. So ineligible industries would be like lending. SBA doesn't loan to loan companies, ironically. Thanks a lot. You know, here we are hooking you up. You don't take care of us. But anyway, lending, gambling, political stuff, speculative ventures, and then real estate that doesn't have occupancy, right? So like speculative real estate's not going to do that either. It has to have a sound business purpose, right? So the acquisition must promote the development and preservation of the business, right? So if I own a plumbing company and I'm trying to buy an e-com company, that's probably not going to expand my business. But if I own a plumbing company and I'm trying to buy one of my competitors, then it obviously has a purpose in my business. Here's a big one that a lot of people don't understand. You have to prove inability to get other financing. So in order to get an SBA loan, you have to get turned down at Wells Fargo. You have to get turned down at Bank of America or your local bank. And you don't necessarily have to go there and face that, but we have to prove on our side as a lender that those banks won't give you money, okay? That SBA is your government-backed loan is your only hope. Owner investment. The buyer must have invested time or money, equity, into the business, demonstrating commitment, okay? So this can be personal funds, assets. A lot of people don't know, but you're going to need to put 10 to 15% down on an SBA loan. But it doesn't have to be cash, right? You could, if you are a plumbing company, just like the scenario I used earlier, and you own 50 trucks that are paid off, you could put liens on some of those trucks and guarantee those as assets to the SBA, and that cover some of your down, if not all of your down payment. There's ways to get creative that a lot of these stiffs don't do. That's why you need somebody at Closer Capital. Like, tattoos come with creativity. And so that's what we've got for you here. Okay, so, but a lot of people won't even push that envelope because they're more concerned with getting the cash out of you. At Closer Capital, here's what I tell my team and teach my team constantly. We are not your lender. We are your partner. And if we were the CFO of your business, how would we advise you to take a loan out, and what would the course of action we would tell you to do? We don't look at you guys as if you're just borrowing money. It's not my problem, it's their money. No, we look at you guys as we're your partner. Because if you borrow responsibly from us once, if we help you acquire a business once, Why wouldn't you come back to us every time you're going to eat up and acquire every competitor in your marketplace? Okay. So that's why we're creative like that. And then there's ownership requirements. As of March of this year, the SBA requires that the SBA loan be 100% owned by a U.S. citizen or a green card holder. So non-citizens can no longer get SBA loans. Okay, so let's dive into the two main loan programs that people take out with SBA and what it requires for not only the business to be loanable, but for you to actually be able to acquire that business as well. So the biggest, most popular loan the SBA does is the SBA 7A loan. Okay, so it's the most common program. And here's how this works. It'll give you a loan amount of a maximum of $5 million. Okay, so that's a loan amount of $5 million. All right, so I want you to think about this for a second. If you are buying a $10 million company, but you only need 50% loan to value, you can still get an SBA loan because they will, even though you're acquiring a $10 million company, you're only needing $5 million to buy it. So it's up to $5 million. And it'll guarantee 85% of, it'll guarantee, the SBA, the insurance side of it, guarantees 85% of that loan of $150,000 or less and 75% above 150 grand. Here's how their credit worthiness works for you, right? They're going to require a minimum score of at least 650 to 690, but that's still considered C paper credit, okay? And at that rate, you're going to have to be an owner that has 20% or more equity in the company, but the higher your credit score, the better your chances of getting a loan, right? And then on the business credit side, you want your target business to have a strong credit history. You don't want tax liens, you don't want delinquencies, or you definitely don't want default on government debt, okay? A lot of people say, how long does a business need to be open in order to acquire it or in order to get a loan against it? And it needs to be a minimum of 2 years, but the SBA likes to see 2 years of tax returns filed. So for a lot of us, that means you've been in business 3 years. If I started my business this year in January 2025, and then I go at the end of January or the January 2027, I'm not going to have 26's tax returns yet. So I need 2 full years of tax returns minimum, but 5 years is really the sweet spot. Okay, this business is, because in an early startup business, 2 years, you can get these dips that take you pretty quick to where you're going, friends, family, network. It's that scalability from year 3, 4, and 5 that shows stability, momentum, and all that. So the SBA, the longer the business has been in business, the better, but minimum 2 to 5 years, okay? The financial health of the business that you're acquiring or that you're getting a loan against needs to prove that the business makes enough money to cover the debt service of the loan. This is called the DSCR. So it needs a DSCR of at least 1.25, right? Which means that they can take out the seller's discretionary earnings and all this other stuff, but the cash flow needs to be for at least 3 years, a cash flow of at least 1.25, DSCR, debt service coverage ratio. So it needs to cover the entire debt plus 25, counting the payment, plus 25% above and beyond that, just to give you an idea of what they're looking for. So if you're buying a company that can't even stay afloat right now, it's not even being able to pay for its bills and it's going out of business, you're better off not to get an SBA loan, wait for those fools to have a fire sale for assets, just buy that shit that way, right? Because you're not going to be able to get it through SBA. It's got to be able to cover the debt. Or if you can present, this is where we get creative again, if you can present a way that your current company or the company you acquired, you're going to increase this, that, or the other immediately, it'll make those changes, they'll look at it with that perspective as well. Kind of like if you're getting a mortgage on an investment property and you show up to the application with already a rental property agreement, the deposit, all that in hand, they'll take that debt off of your service because it's already taken care of. We can do the same thing here for you creatively, okay? And then the down payment, they're going to want a minimum of 10% down payment, but they call it an equity injection because it doesn't have to be 10% cash. It can be 10% of assets. It could be collateral, but they're definitely going to want a personal guarantee. Let me tell you how the SBA works. Everything you own, they want it. They want to lean against it until they're paid off, okay? So, and here's the rules, the golden rule. he who has the gold makes the rules. The SBA has the gold, so you can't say, oh, I don't want a personal guarantee, or I don't want to put up my other company against it. They're going to require whatever they're going to require, and they're going to say, if you want our gold, here's the rules, okay? So, but we do seller financing, working capital seconds, merchant cash advance seconds, lines of credit seconds, show you how to leverage assets. Like, first of all, if you're buying a business and you don't have 10% of the cost of that business cash, that's a red flag, could be a problem, right? Just saying. If you have that, you want to preserve it because you're going into unknown waters and you want to come in with the minimum amount of cash out of pocket. There's ways for us to cover the debt as well. Collateral is required with SBA loans, right? Whether it's real estate, equipment, vehicles, accounts receivable, contracts, or other fixed business assets. For loans under 50 grand, they really don't give a shit about collateral, but anything above 50 grand, they're going to want some sort of collateral and a personal guarantee. So all owners with 20% or more equity in the company, in the remaining company, whether it's the acquired company, whatever the main company is, all owners with 20% or more must personally guarantee it. That's as of, actually it starts in, right here, I'm looking at this, it says spouses with 5% or more ownership of the person that has 20% or more, now they're going to have to personally guarantee it as well. So if I own 20% of the company and Amy owns 5% of the company, in the past, I could sign on it and keep it off of her credit. Now she's going to have to sign on it as well because she's my spouse. That goes into effect June 1, 2025. So you got about a month before we start seeing that happen. They're going to require a business valuation. Okay, on a business valuation, it's an appraisal. They're going to come in and they're going to try to lowball this because first of all, the owners always think their business is worth more than it is, and the buyers always think it's worth less than it is. The person that does the business valuation, the appraisal on it, that's what the value of it is. And their job is to come in conservative so that they don't overinflate it and SBA potentially lose their money, but they also don't want to undervalue it because they want to make sure that the proper financing terms and everything else. So the business valuation, it's got to be spot on though. It's got to be done correctly. And this is where the financials, the conversations, the diving into the minutia of business really, really matter. So a lot of times when we are doing 7A loans and helping somebody acquire, we make sure that all the proper documents and everything are in place so that the business valuation has all of the facts so that they can get the biggest number possible, because that's what we're looking for, right? And then they want to make sure that if you're experienced, a lot of it, especially in the real estate side, because you can get real estate loans through SBA, they want you to have at least 2 years of real estate experience and at least be profitable for 2 years in experience. If you're let's say that you are you own a software company and now you're going to acquire a roofing company, but you don't know shit about roofs, they're not going to give you a loan on that. But you can bring in, and this is where the creativity happens, you can bring in a silent partner or a partner that does have experience in there, get them in the game, get them to personally guarantee it, get them as a part of the cap table as well. And now all of a sudden you've passed that because they've got somebody in the game there that knows the game and has at least 2 years experience. So if you're looking to acquire a business, or if you're looking to put a cash injection so you can expand your business, the SBA 7A loan is the way to go. Now, if you're wondering what makes, to take all of this down into one final thought, if you're wondering what makes a company eligible for SBA, let's break it down like this. Is it for profit? Is it in America? Is it cash flowing enough to cover the debt that you're going to take a loan out against it? Has it been in business at least 2 to 5 years? And do you have experience in that field acquiring that business? If you can check all 5 of those boxes, then SBA is probably going to be the best way for you to go. If you need an SBA loan, if you want to acquire a business, or if you just want to get on a phone call and have a conversation, then you can go and apply at closercap.com/CEO, or you can call Lenda, our AI agent that will answer all of your questions and even take an application and get the process started for you. You can call Lenda at 215-999-8412, and she'll be more than happy to help you and serve your needs and answer your questions as well. We're here as always at Closer Capital to help you out, give you a financial education, and help you understand the ever-changing financial markets available these day and age so that you can get your hands on the right capital when you need it the most. Thanks for watching.